Thank you. So our topic is AI in FinTech. I'll just be very brief and take maybe 10 minutes of your time. So when we're talking about AI, I know it's a buzzword and our panelists would have a lot of things to say about it. But the new era of AI in financial markets is somehow very important for two major reasons. First, the sector financial market is a very critical thing for the whole economy. We understand the importance, I'm sure. And as we have seen, especially globally, the data volume and velocity is just mind-boggling. We are somehow having to deal with, let's say, 30 terabytes of data every second that are being traded everywhere in the world. So 30 terabytes of data every second is very high volume that is very hard to process manually. And we know that financial markets are a gateway to whatever we don't need in systemic risks. So this interconnectedness is what makes financial markets very viable. And AI is no longer something like experimental, something out there. It's actually influencing everyday life as we see it. It's ubiquitous all around the financial value chain, and it has demonstrated somehow its stability and performance. So what are the major benefits that we can draw from AI in this regard is that we have greater speed, accuracy, and processing. We have ability to analyze unstructured data. For example, we have seen sentiment analysis in social media. We have seen different filings from issuers and news articles. All this unstructured data has to be somehow extracted and processed. And AI, somehow the benefit of AI can also lend itself to early warning systems, especially to prevent systemic risks that can crash the whole economy. And it has also a significant cost reduction as human capital has been somehow more expensive as we follow along. IOSCO, I'm sure all of you are aware of what IOSCO is. And IOSCO has done a research in 2021 and in 2025, and these are the major differences. Back in 2021, I cannot believe 4 years ago was back then, because we have transferred a lot of things and everything has transformed a lot. So in 2021, most capital market institutions used AI for basic robo-advisory, for credit risk monitoring, fraud monitoring, order routing, and basic prediction models. But currently, we are using it for advanced algorithmic and AI-driven trading, for sentiment analysis from, let's say, social media, from different news articles. We are also using AI in AML and CFT surveillance, intelligent tasks, different things. Recently, SEC has just licensed NASDAQ for a very intelligent trading system, and also conversational AI, this you have already seen, for client communication. So the difference in just 3 years is mind-boggling in a way. So we have seen rapid innovation. We have seen the transfer from auxiliary task helps by AI into core functions like giving trading advices. We have also seen it in client interactions where generative AI is used. And then, of course, trading and investment enhancements. So this is enabled by the idea that data growth and advanced computing has somehow introduced into AI, and the advancement in technology for different infrastructure has grown a lot. When we zoom into capital markets, AI is used in SupTech or supervisory technologies. These are usually used by different regulators to ensure compliance. So automated market surveillance systems are now using AI to somehow detect different patterns. Real-time monitoring of risk indicators that may transcend into systemic risks. Intelligent regulatory reporting and analytics are being used by different regulators whenever there are different filings that come into the regulator. And improved supervisory efficiency has been happening in the past through automation, digitization, and digital transformation. The reverse side, which is RegTech, where different regulatees, if you say so, regulatees somehow use AI for automated compliance checks, for AI-powered KYC and AML services, for data flows in reporting for different issuers and other regulating entities, as well as for workflows in everyday tasks as well. So whatever we have discussed so far is the trends globally, but how about currently in the country? Are we actually ready for this landscape? Are we ready for AI? So we have tried to assess some basic things, and for the past 2 days, as you have seen, we have presented different things where the capital market is, as an ecosystem, is ready for a functional system. We have created, for example, ESX has created an automated trading system. CSD has created a CSD system. The Capital Market Authority is operating a market surveillance system. We can confidently say that we have a working system all along. So it's not really a green field anymore. We have established the core market infrastructures. In ECMA, we have established a robo-advisory licensing regime. So anyone who is interested to be a robo-advisor can come and take license from ECMA. And the Council of Ministers just a few days ago has approved the Digital Strategy 2030, which mainly includes different disruptive technologies, including AI, of course. And we also have a new startup proclamation, which facilitates innovation. And we have an active regulatory sandbox for FinTech, where different innovators can come in and try out anything they want, even if the law does not exist, even if any regulatory frameworks are there in place already. We have created a regulatory sandbox where different innovators can come and test their products. So I would confidently say that the FinTech landscape is viable for AI currently. And as the main title of the presentation itself says, AI is no more in the evolution. It is actually a revolution that has revolutionized everything that we think of.
Good afternoon, everyone. Thank you, Daniel, for your insightful presentation. I'm Kibrewossen, Head of IT from Ethiopia Capital Market Authority, and I'm honored to moderate this session, this important session. So, as you know, in just few years, AI has shifted from a promising experiment in financial services to a core driver of competitive advantage. Markets are faster, data volumes are exploding, and supervisory expectations are rising. Today, the question is no longer whether AI shapes the financial technology, but how quickly and to which direction. This panel explores how this journey, how we explore this journey. So we'll see what are changed so far, what are still needs to change, and how. So I will start by saying thank you to all panelists for coming here and sharing your expertise. And I'll start my first question with Mr. Munir. So as you know, Mr. Munir is Chief Executive Officer of Kifiya. You know, Kifiya has been in the area of digital payment and inclusive financing. So we know also Qanna platform from Kifiya. has been the first digital lending platform that uses AI to assess the MSMEs and the individual creditworthiness. So from this perspective, from the whole goal, I wanted to ask Mr. Munir, what are the specific problems that AI helped you solve? We wanted to understand if you are using it for credit scoring, for detection, or risk segmentation, and what were the challenges during the process?
Thank you, Daniel, and thank you for ECMA for inviting me for a very interesting subject matter. On my way here, I was looking at the message of Her Excellency Hannah. She talks about an inclusive financial future. So if you look at and pause to think what that means in Africa and in Ethiopia in particular, would mean it translates to addressing the needs of micro, small, medium enterprises and smallholder farmers, because they make up to 80 or close to 80% of the economies of Ethiopia and Africa. So within that context is, how do you now solve the needs, the demands, and the credit gap of MSMEs? In Ethiopia, that credit gap is close to $7 billion. In Africa, it is close to $400 billion. That gap for MSMEs to survive, grow, and employ more people. So within what we do is the biggest challenge for MSMEs to access credit is the lack of collateral. They don't have collateral. In the absence of collateral, then what works? Credit scoring. And for credit scoring, you need credit history, which goes back to a very structured data requirement, which does not exist. So how do you solve for a continent, a country where there is very little data that is structured and there is no collateral that they owe? And this is where artificial intelligence, machine learning, deep learning comes as a solution. So what we have done over the past 2 years is leveraged machine learning and artificial intelligence technologies to build credit scoring for MSMEs and smallholder farmers. And the power of artificial intelligence is not very far. It is proven in Ethiopia, whereby 6 banks today have unlocked close to 58 billion birr dispersed in a period of 18 months. For those of you who has a challenge on birr, it equates to close to $500 million worth of credit. For 80% of those people, it will be the first time that they have accessed credit. Almost all, have been able to use it productively, either sustaining their enterprises or growing their enterprises. Close to 60% of them are women-owned or women-led enterprise. So the power of AI is not in the future. It is today in Ethiopia. If you ask me in detail, what is that credit scoring and how did AI help? I will give you 2 use cases. Use case 1 is AI enables you to look at raw data, understand that data, and deliver or look at it if there are patterns in that data. What are those patterns? And they transform these patterns into models that can translate to credit scoring. That's use case number 1. An example, to be very specific, is if you take post data or payment data, what AI does is that it takes it and translates it into futures that shows sales volatility. Is that MSME data that pays for services, and that data, does it show volatility in the sales that they do? And that volatility will tell you what kind of scoring you give it. A second, and I think Kibrewossen mentioned, early warning systems. So in smallholder farmers, we have 24 years of satellite data. That data tells us if plants are growing or withering, so positive and negative. And so we predict leveraging AI. So it gives us an early warning indications whether a farmer will be able to repay the credit he or she has taken. So these are two examples. The challenge you have asked me, at the end of the day, AI requires two things: data. Where do you source it? Where do you build it? Where do you get it from? And we don't have enough data. So challenge number one is data. Two is human resources. Because at the end of the day, you need the data scientists, the data engineers, the analysts that translate and enable AI to work. These are the two challenges. Thank you.
As you mentioned, you have mentioned the issue with data, which is always the case when it comes to AI. We'll elaborate it, we'll broaden it with our next guest, Ms. Betelhem, which is the CEO of iCog and the chief advisor of iCog Lab. As you know, iCog Labs is working in advanced AI research and building AI-driven products. So to make it a little bit broaden the idea, since you have a broader view, let me take your assessment. How close is Ethiopia to develop a homegrown and a world-class AI? And on the process of getting there, we wanted to know where should be the focus? Is it on a specific investment or international partnership or talent development?
Just to give a bit of a background, we've been working in the AI scene for the past almost 13 years now. And the concept of AI has been around for a while. Now people are talking about AGI, right? And then, it goes to ASI, which is the singularity. So we're really moving fast. It's just now AI is becoming a buzzword, as Munir has mentioned. It's because maybe we have generated enough volume of data, maybe not in Ethiopia, but around the world, and enough infrastructure to be able to analyze these data and produce something out of it. So in terms of the innovation itself, it has been around, but we are seeing the practicality, especially with the rise of, LLMs, with the introduction of ChatGPT, and all of these innovations that are reaching the consumer. That's where a lot of people see the AI application, but it expands even more than that. And especially in the financial sector, besides, of course, the credit scoring aspect, we can see how it can also drive, customer adoption by analyzing customer behavior analysis. We can see how it can provide advisory services, especially when you talk about building an inclusive financial ecosystem in Ethiopia. It's very important that people are aware about the services that are provided and what they can access and where they can access it. And especially where you can see where there are low literacy levels or low digital literacy levels, you can see AI coming in, providing those advisory services through voice. So there is a lot of possibility in terms of what can be done. But one thing is, it's going to be expensive. So I think that's also something that people overseas that, okay, you know what? It's here, the technology is here, but to implement it, it's going to be expensive. One, of course, organizing the data itself is one thing. Second, Munir has mentioned, for example, they're looking at alternative data resources where, you might not find enough resources, let's say for credit scoring. So bringing that, organizing that is going to be expensive. That's one. Second is compute. We don't have a lot of infrastructure when it comes to compute. We know that the Ethiopian AI Institute has a huge, data center that provides this, but that's still very limited, especially when you come to, encouraging innovation in the private sector. So that's also another layer. In terms of human resource, yes, of course, there are a lot of efforts that are happening right now in terms of, having I think degrees or master's programs in universities, but there are also efforts, within companies to train a lot of young people to pursue AI. So it is possible. Yes, of course, we can get there, but we have to be very intentional about our investment. We have to be committed to it. And the government is already going into that direction, which is really helpful. But in terms of regulations, policies, that also is something that we can, really work on in terms of implementation.
All right, thank you. I think this sheds light to the whole topic. Since you mentioned about the focus, I think, I believe the government is giving it a lot of focus, so that will be a good point. Just to mention about what you have said earlier, the buzzword, yeah, it's becoming a buzzword. We are hearing about the term AI almost in everything. We listen to it in entertainment, in transport, in military, in everywhere. Almost everywhere is mentioned AI. So my next question will be, since our audience are very keen to know what to do with this idea, so let's make it a little bit practical. So how is the AI research actually being translated into a real-world financial applications from Ethiopian context and from private sector's context?
I think, yes, AI has been a buzzword. As you might have seen, there's also a lot of investment, not necessarily in Ethiopia, but around the world, going into AI because of the buzz that has been created, right? But I think we need to differentiate what it means to automate and to actually build an AI tool. AI requires a lot of data. So one of the two ways you can get this data is, one, you have to collect it, clean it, build data pipelines, or two, you have a product that people use that actually generates data on its own, right? So for example, social media platforms, they're already collecting data from the people that are, posting pictures, texts, etc. Or let's say, for example, Ride is already, collecting data from where people are going. So they can build their AI tools on top of the data that they are already collecting. But if you're coming up as a startup or a company that's just starting, one, where's the data coming from? One. Also, what type of AI are you using, right? Because it's not just LLMs, you have predictive analysis. What type of, machine learning methods are you using? Those are the questions that we should be asking. So when we look at AI tools, they have to use a lot of data, which, the models required. The type of models that you're using, also, that's also a question. Some are proprietary that the companies build themselves, or some are open source that you utilize, and also compute, right? So it's not easy running an AI service for a wide range of, customer base that you have, because it's going to be super expensive. And this is also a challenge that ChatGPT is having, and all of these, big organizations are having. So one, when you look at, the Ethiopian market or other developing markets, how can we have, models that can actually run on lower resources, right? So that's something that we need to really be cautious about. Second is, what alternative data points can we collect and make available so that not only the government, but also the private sector can use? One big issue, for example, is language. All right, for example, if you have open source data that's available in Amharic, in Afan Oromo, in Tigrinya, and all of these languages, people don't have to spend a lot of money collecting the data. So if you want to build, a financial advisory or robo-advisory as mentioned, the data is easily available. But we're not there yet. So I think we have to be very cautious when we use the word AI because there's a lot of things that we need to consider. But I think efforts towards making data available and open source is very important. Research towards low compute resources and how these models can run is also important. Third, and very important, is also investing on human resource to make sure there are enough people that are actually building these AI tools and not just, consuming them. I hope that answers your question.
I think you have raised a good point. You clarified it very well. This will lead me to my next question to Mr. Munir. We know Kifiya has been doing a lot of AI-driven solutions. If you want to mention if there are any AI-driven solutions or initiatives that you can share, and how are you aiming to enhance efficiency, user experience, and compliance with financial services?
I think in 2025, we have been focusing a lot around solutions, financial service solutions for smallholder farmers. So what excites me these days is the use of 3 sets of data. One is satellite data, the second is yield data, and the third is soil data. If you combine those 3 major data and you have a time series based on synthetic data that is derived from artificial intelligence, we start to having solutions for farmers. And we have been experimenting it for the last 6 months. So 2026 for us is really about increasing access to financial services and advisory to smallholder farmers. So that is, I think, where, as a company, we want to branch to, apart from MSMEs. The second area is really now thinking about, we have been focusing for 2 years in micro segment. How do we, micro and small, how do we shift to the medium enterprises? And we have been, again, piloting internally invoice financing. So the ability of turning an invoice and have it predictable need, whether it is the verification of the invoice or whether the estimation of the financial need of the medium enterprises, is to offer, again, enable banks to offer invoice financing. So these are the 2 areas that really excite me. In terms of improving and enhancing, I think what we would like to see is many companies moving their software development capabilities on artificial intelligence platforms, because you don't need to reinvent a lot of the work, because these large language models Betty was talking about have now created the necessary infrastructure for software developers not to reinvent the wheel each time they want to do something. So from an efficiency perspective, I think that's one thing that is really interesting in this space. However, we need to be, as Betty said, it's not only the human resources. A lot of the time, innovation can only scale in the presence of enabling environments. And those enabling environments for us are, number 1, policy and regulation. In the absence of enabling policy and regulation, I don't think AI can scale. So luckily in Ethiopia we have that. Second is power. It's power hungry. These platforms require abundant source of power. If you don't have electricity abundantly, they just don't work. 2, Ethiopia is abundant in power. 3 is telecom infrastructure, the reach. Africa increasingly now has mobile penetration that is significant, And the 4th is, again, the protection around it, whether it's the privacy or whether it's the security. These 4 things are paramount for the utilization and scale of artificial intelligence. And I think Ethiopia, we have it. Africa increasingly we have it. So we are able to leapfrog in this space if done right.
All right, thank you. That's very insightful. You have mentioned your interest on the farms, which is great, and you are working on financial things. That's also nice. Let me take the next question to Mr. Daniel. Thank you for being patient. I'll give you whatever time you need to explain the next question. On your presentation, we have seen that what the global environment looks like, which is nice for AI right now. And locally, there is a promising environment, as our panelist tries to describe. So from regulatory perspective, or maybe from your perspective, what is the next major milestone that ECMA is planning in the digitalizing journey? And what should we expect from ECMA in the next 1 year?
Thank you. Thank you very much. Maybe I would like to start with where Munir left off. When you mentioned what are the very important necessary elements, you mentioned regulation. Maybe it's because I am from the regulator. I'm going to take it as you put it at first because this is our setting. Huh? So as regulators, Dr. Isaias, our colleague, always mentions there is always a balance between regulation and development, regulation or control and innovation. Whenever there is a very tight regulation, then maybe development will die. And whenever there is a very loose kind of regulation, innovation will somehow speed up, but at the expense of what you mentioned, like privacy, at the expense of some manipulation and whatnot. So as regulators, what we want to do is we always want to fine-tune this so that the balance is always set, so that we somehow instigate and facilitate innovation while making sure that we protect whoever we have sworn to protect, which is public interest. So coming back to the question from the moderator, we have actually built the foundation. We have laid out all the things that we believe are necessary to somehow instigate innovation in a way. What we can expect from ECMA, and I also speak on behalf of the whole ecosystem because ECMA is the apex regulator of the capital markets. First, since the Digital Strategy 2030 has been approved, it is something that we were also working in collaboration with the Ministry of Innovation and Technology. We want to create, let's say, a 3-year, a 4-year, a 5-year roadmap for the whole ecosystem, saying that these are the things that we expect, this is what we want, this is what we plan. And all this is going to align with the Digital Strategy 2030. And AI is going to be at the forefront. There are other disruptive technologies, emerging technologies that we are going to include. Another thing is that we also believe that we have to lead by example. So if the regulator does not adopt all these technologies that are very important, we are not going to trust, or we are going to believe that, you know, the other regulatees are going to come to this direction as well. So we want to lead by example, and we want to make sure that we adopt AI as much as possible. Actually, we have already started. We are working on chatbots, for example, that are going to somehow make regulatory framework very easy for the public, because public reading of different regulations, proclamations, directives that we have is going to be, it's not going to always be as easy as we think it is going to be. So we are thinking of creating this platform where we collaborate with the public as much as possible. So we are working on chatbots. As you can imagine, we are somehow biased towards risk because we are regulators. earlier, someone mentioned here the risk of privacy as well as the risk from, because we always talk about AI as the next best thing, and then we talk about the benefits of AI, what we can take out from it. But at the same time, we also have to see the other side, which is what challenges are created by AI that did not exist before AI. We can talk about deep fakes. You have seen a lot of things. And this directly affects the market. I remember in 2023, I think, there was one video that was somehow circulating where the Pentagon was on fire and whatnot, and the market somehow had a very big dip. So deepfake has actual influence, actual impact, albeit negative, in capital markets. So we have to make sure that we are very cognizant of what we are aiming for, and somehow regulation is going to be important here. But you can expect we are going to adopt AI as much as possible, even when we do not adopt, whenever we do not think AI is mature enough to enter this side of these services. For example, whenever we even are thinking of that, we are making sure that whatever systems we are going to build are going to be integrated with AI in the future when that particular sector matures enough. So from the regulator side, this is what we are thinking. But we can also somehow expand it to, let's say, private sector. We can expand it to different capital market intermediaries. And we are somehow trying to encourage capital market intermediaries to be part of this agenda, part of this discussion. And upskilling comes right here. Different startups we have created, as I mentioned earlier, we have created a sandbox where whenever there is no regulation for a particular service, we can always somehow test a particular product in a sandbox and see how it holds. So as regulators, this is what we are doing.
Thank you, Daniel. That was thorough and it was nice. Before we close, in less than 1 minute, if you want to say anything which is answered in the session, I'll give you the chance for anyone.
I think in terms of the risks related to AI, I think that's a very important thing to touch upon. So besides, the deepfakes and the innovations themselves, there's also bias within the data that we collect. And that's a really harmful aspect of what, these tools can generate. So being very mindful of the data that we collect and having even regulations around, the type of data sets these AI tools use is very important. So the bias comes from the data, but it also comes from the people who are developing it. There is an example. You said 1 minute though, right? Let me just say this example. And, the US immigration ICE was using this AI tool to decide whether or not a person would be a good immigrant. And that was based off data, already biased data that was available to the immigration, center. And this has created a lot of issues. And we might not necessarily, see, because it still feels like AI is on the air, but it actually affects people's lives and how they live, how they get access to finance, how they operate. So it's very important to be very mindful of the bias that's created through the AI tools. Thank you.
Thank you. You have used your time efficiently. Thank you, everyone.